and welcome everyone to the Capital Mind podcast. If you'd like to know more about us, visit capitalmind.in, and if you'd like to invest with us, do visit capitalmindwealth.com.
This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Clients of Capital Mind may maintain positions in the securities discussed in this podcast.
Hello folks, and welcome to another episode of the Capital Mind podcast. Today's episode is special because today we'll be telling you an interesting story. We will take you back to the 80s when there was only one big exchange, BSE, and few regional stock exchanges such as the Calcutta Stock Exchange. This story has two characters. On one side, we have the late Dhirubhai Ambani, the founder of Reliance Industries, a businessman who had a fascinating rags to riches story, starting his career as a petrol station attendant and then went on to build a multi-billion-dollar empire without any formal education. He was known for his astute business acumen, and some people say Ambani is an acronym for ambition and money. On the other hand, we have a very powerful bear cartel who had the power and muscle to make or break a stock. What happened when both came face to face? This story is about how the bear cartel took on Dhirubhai Ambani and heavily short-sold Reliance Industries, and how Dhirubhai Ambani led an equal, strong counter-attack, and as a result, the BSE had to be shut for 3 days. So, this story will be narrated by Deepak Shinoy. Deepak, welcome to the show, and please enlighten me. I can't wait anymore.
Hi Aditya. It's a lot of interesting things that you've just mentioned, and I suppose this was more than 30 years ago.
Yeah, exactly.
So even I was just 8 years old when it happened. So I'm going to put a disclaimer here that I depended on the book by Geeta Piramal called Business Maharajas. We'll send in a link on the podcast. Interesting thing that happened. It was 1982, I think around April.
Yes.
When the stock of Reliance Industries, which was listed on the Bombay Stock Exchange, they started to see a fall, and the stock fell from 131 to 121 in a very short span of time. This is a different time of when you bought a stock, you didn't have to pay for it instantly.
Okay.
You get there was a 14-day settlement period, which means that today, every day in the evening, trades are settled. When they say settled, it means whatever you've bought, you have to pay for, and whatever you sell, you have to deliver. And you get a day, T+1 or T+2 is what is called today. At that time, it was a 14-day settlement period. So whatever you had bought, it was a window of 14 days. And every 14 days, people would have to either pay or deliver shares. And there was a system called Badla, and I'll come to that a little bit later. But what was to happen was, you didn't need a lot of money to just short shares because you didn't have to deliver them. And so in this 14-day period, if you shorted a share and bought it back within the 14-day period, it was effectively like what is intraday today. Okay. So effectively you could buy a sell today, that is a Monday, and buy it back, say, next Monday. It would still fall within this 14-day period, and it would be fine. Nobody would ask you for any money in the interim. It was considered within the settlement period. Now,
And Deepak, I have a question. So a lot of people who listen to us are new to the stock market. So let's not assume that people know what short sell is. So can you please explain in very simple words?
Okay. So it's an interesting thing where, so people think you have to buy something, then you own it, then you can sell it.
Yes.
What if I told you that you can sell something today and buy it back later? So the sell can happen first. And you're wondering, if I don't have it, how do I sell it? That's why it's called a short sell. Short sell means I don't have it. I'm short that stock. I actually don't own it, and I'm selling it before I own it. So when I say I'm short, it's almost like saying if I go to a shop and I want to pay for something for 100 rupees, I have only 90 in my pocket, I'm 10 rupees short, right? Okay. So I don't have the 10 rupees. In this case, I don't have the stock. I have sold the stock without having it, which means I have short sold the stock. Okay. So it's not just selling, it's short selling. You didn't have it in the first place. That's why it's called short. Now, you could do this as an individual on the stock exchange on a daily basis. You can short in the morning, buy it back in the evening. Nobody's going to ask you didn't have the share, why did you sell it? Because within the same settlement period, that means you don't need to have actually owned the stock if I am actually short selling it. Now, there are new things in the stock exchange today where I can borrow a share from you.
Okay.
And there's a system called a stock lending and borrowing where I can borrow a share from you and then short it. Because now I've actually got the share, but it's not my share, it's your share. I've borrowed it from you and then I short it. And I pick it back up, let's say a month later, and I can give it back to you. Meanwhile, I have to pay you a certain borrowing fee, let's say, for a month. And why am I shorting this stock? I'm expecting the price to fall down. If I'm a large enough player,
Okay.
I can go and beat down a stock by just selling. And I don't own the stock, remember.
Without paying a penny?
If you're a broker, you have to pay a little bit of margin to the exchange. But largely, this was 1982. It was the wild west in a way. I don't think people cared about margins as long as you were a broker. And a lot of the brokers kind of wink, nod. BSC was at that time a coterie of broker. It was broker owned. Now it's more professionally owned, right? So that time it was broker owned. Even now I think it's broker owned, but that time it was broker managed as well. So there was a little bit of a tacit understanding and a sense of trust between players that people won't over leverage themselves.
Okay.
But there's also a time when 35 years ago the word crore was a huge thing. People's average salaries were like 200 or 500 or 1,000 rupees a month. So it's a crore was literally a very large number. So for a lot of people now to come to what happened, around 10 lakh odd shares or 11 lakh shares were shorted by this cartel, and this was a bear cartel that was known to short shares, right? In this, they would actually come and short one share, and that share would get hammered. Everybody would scamper away, and the stock price would fall, say 20%. They would go and buy it back 20% below, and then life would be fantastic. They would have made the 20% in the interim. Now remember, I can short sell at 100. If I keep selling the share, somebody else is thinking, oh my God, Deepak is this big player in the market who is selling a share. I'll also sell my shares.
Because there might be something fundamentally wrong.
Yeah,
People
so
would
they think like that. And then they bring the share down to say 80 rupees. At the 80 rupees, you've brought down the share to 80 rupees. I go and buy it back at 80. Now I have effectively sold at 100, bought back at an 80, which means I've made a 20 rupee profit. I might have put some money on this trade and I made 20 rupees profit,
which is amazing.
So if I do this for remember, if I do it for 10 lakh shares of Reliance, bring the share price down from 131 to 121, I have made 1 crore rupees by earning that 10 rupee. But that's only if I was able to buy back at 121. The problem really in this case was the bear cartel was successful in bringing the price down, but Ambani was smart. He realized that if this bear cartel was allowed to go on, they would take the share price down to wherever they wanted, create panic in the share, which was not really, and who would lose? Ambani would not lose because Ambani is not selling his shares. It was a small investor that would lose money, and they would lose faith in the Reliance share.
Retail guys.
So he said, listen, I got to do something about this. And he said, you can't hammer my shares down. Let me see. There was a set of people. Now, companies were not allowed to buy back their own shares. So a bunch of people called the Friends of Reliance.
Okay.
Brokers friendly to the Reliance community and stock. And they came in and they started to buy Reliance shares. More than 8.7 lakh shares, I think, of the 10 or 11 that were shorted by the brokers were bought by. Now remember, nobody is paying any money here, right? So one guy shorted, another guy is bought. The settlement period is 14 days away or a few days away. And this plan was, these shares were being bought. This was a lot of money also. You're talking about a crore of money. Now to buy 8 lakh shares of Reliance, which was 121 rupees, you still needed about 10 crore rupees.
Yeah, which was a big sum.
A lot of money. So you really had to figure out where this money was coming from. But that means the money hadn't yet been paid for, right? So it was waiting for the settlement period for any payment to happen. And the people who were shorting also would have had to effectively produce the shares whenever the settlement period was done. Now here comes the interesting thing about Badla. If you shorted and you didn't have the shares, or if you went long, that means you bought the shares and you didn't have the money to pay for the shares. You simply went to the guy and said, listen, let's move this settlement to the next cycle.
Okay.
The next 14-day cycle. After 14 days, I'll pay you. instead of, so effectively you give me credit for 14 days. Right?
So I just want to delay the delivery.
Yeah. So what I could do literally is I could do this and say next 14 days the share will go up and then I will sell it. Then I don't have to settle. So if it's 120 rupee share, usually they'll say, okay, give me 2 rupees or 1 rupee and move it up by another 14 days.
So that was the Badla system.
That was the Badla finance. So effectively you said instead of paying 10 crore rupees to buy 8 lakh shares of Reliance, you pay me 1 rupee per share. So it's 8 lakh rupees. So I pay only 8 lakh instead of 10 crores. And I move the settlement over by 1 week, by 2 weeks. In 2 weeks more, let's say the price has gone up by 5 rupees. I will just say cancel my shares. I have paid only 8 lakh rupees. I earned 5 rupees on 8 lakh rupees, 8 lakh shares, which is 40 lakh rupees. The Badla financing cost was only 8 lakh rupees. So, ho gaya, bas, I'm at 32 lakhs. The remaining is my profit. I don't have to ever produce the Reliance shares. So typically that was Badla.
Okay.
If I bought the shares, for instance,
If you're long.
if I'm long and I don't want to pay the money, the guy who has sold the shares has to receive the money, but he's allowing you to extend the period by another 2 weeks. So he will receive the badla for that. So effectively it was like a guy lending his money, lending his shares, lending his money for another 2 weeks, and he would get some interest for it. Now, if a person is shorted and he cannot deliver the shares, but the other side says, I want the shares, I'm willing to pay the money.
Okay.
You pay, the short seller pays something called unda badla, the other side, the badla for actually having short sold the share.
Oh.
Now remember, the share is the same share, whether it is bought or it is sold, it's the same share of the same company. So effectively, the unda badla will happen if more people are shorting. And the long players are willing to buy the shares.
Okay.
And the normal badla will happen, which is happening for more players than others, where you will not want to pay the money for the shares and you will want to stretch the payment date by another month. There's an equivalent today which is called futures, but it's a slightly different mechanism. So I'll come to that later. But so what can happen is, what happened in this case was there was a massive buying and massive selling of Reliance shares.
Okay.
This happened over a consistent period of this settlement period. At the end of the settlement, Dhirubhai Ambani went in and said, I now want delivery. I am willing to pay this money for these shares.
You sold it, now you give me the shares.
Now you sold it, no, so give me the shares. The guy said, whatever, what is your unda badla rate? Ambani said 50 rupees.
Oh, for a 121 share.
For a 121 rupee share. Now, you can't pay 50 rupees for 2 weeks, right? So you're almost like looking at this and saying, this is crazy, I'm not going to pay. He's like, well, that's my rate, otherwise give me the shares.
Oh, so one could ask wild rates.
Because the badla is a negotiated rate, right? So it was not, it's even today, any concept of a badla rollover or anything it's a rate that is based on the market. You can have one person saying, I want the shares today, I don't care whether you don't have it or not, you find the shares from somewhere because I want the shares.
Okay.
That's what Ambani did. He says, give me the shares. So he also knew very clearly, because he knew the companies, the number of shares that were outstanding, who held how many shares and so on. He knew that these people could not locate the share. So the question really was, where do these people find the shares? They don't have the shares. They never expected to have the shares. They expected to roll over the badla and carry on. Now, what Ambani said was, unless you settle this trade, the stock exchange cannot open. 3 days while this negotiation was happening, the stock exchange did not open. Now, there was a lot of things that these brokers could do, the bear cartel. They could go to an LIC or they could go to some of the big players in the market and say, please give me whatever shares you have, I'll deliver against those shares. Baad mein I'll pick up from the market and give it back to you. But Ambani was smart and he was very well connected, and he made sure that none of those things were allowed to happen as well. So therefore, this bear cartel was in trouble. And they would have lost 5 crore rupees to pay this, or more than 5 crore rupees, in fact, because eventually they had a number of shares more to play just the badla or even to square off the shares. So the problem was stock exchange was closed. What do you do now? They said, okay, listen, we'll open the stock exchange special session just for Reliance shares so that the bear cartel can buy the shares from the market and give it to Ambani or the friends of Reliance. If it was not Ambani himself, but it was the friends of Reliance. Now the question was, how do you do this? How do you deal with this? Now, obviously, Dhirubhai was not angry because these people were trying to make a profit, but he was also angry because people were trying to hoodwink the small investor. The company's fundamentals were sound, and you wanted to beat down a sound company by just destroying the value of the share just because you have money. He said, "Well, I'm here. You come and try me now." So when he said this, the bear cartel, which was well connected to famous clans, and they there were a bunch of people who said they were a sort of Marwadi broker clan or this or that, but you don't
especially
know
Kolkata based.
Yeah, they were a Kolkata based group, and that was so everybody knew who they were, except nobody wants to talk about names. But the interesting thing was when they opened the market for stock exchange for a few for this special trading for Reliance shares, the Reliance share price zoomed up to the point where you see 120 plus 50 is 170, right? That's where it will trade. So when these people started to buy shares, they had to pay that 170 price. And effectively they had sold at 120, 130 and they were buying back at 170.
Heavy losses.
It's massive. This would have bankrupted most of them, but essentially they somehow found their muster to actually be able to collect those shares. And it's possible. I'm not saying this actually happened, but it's possible that the friends of Reliance were the ones who had to sell back the shares in the first place through other, anonymous
I get it.
people. So if effectively the guy who made the loss of 40 rupees per share and the guy who made the gain of 40 rupees per share were two different people, right? The short sellers, the bear cartel who sold those shares were the ones who lost. And the ones who gained possibly were the friends of Reliance. Now, the effective thing was that in the end, the stock exchange was closed. It was not allowed to open. The bear cartel had to, lick their wounds and run back with their tail between their legs. And it turned out that this whole thing came about in a complicated way when the then finance minister Pranab Mukherjee in 1983 announced in some parliamentary session saying somebody asked him who is the beneficiaries of a controversial NRI scheme. Okay. They found out there was a bunch of companies called Crocodile, Fiasco, and a bunch of others,
weird names,
which brought in 225 million, which is 22 crore rupees to buy Reliance. So they effectively invested in Reliance shares. And when was this? Between April 1982, which is when this crisis happened or started to happen, and to about somewhere in 1983. So they actually it turned out that nobody knew the source of the money. Remember, 10 crores was a lot of money, and the friends of Reliance were saying that, listen, we'll put the money down, please give us the shares. Where did they get the money from? Exactly. 10 crores was not easily available. And it's possible that this foreign NRI investment was the one that brought it together, and people still say they don't know the source of that 22 crores because a lot of those companies were created a few days before the investment actually happened. They didn't have much paid up capital. How do they get the money? This thing became a big, even the RBI probed into it. But my point is, those times the rules were just silly. If, the real story here is that a bear cartel wanted to take down Reliance, and they wanted it to take it down only temporarily because they intended to buy back the shares at a lower price, and therefore it was not really a permanent short of any sort. And they had done this with hundreds of other companies and succeeded, and they continue to be operational in the market. This is about 30 years later. There's a bear cartel always there, and some of them have wisened up to the fact that you can't short good companies, so they short bad companies and they make money on bad companies. There's no problem with that, because if you short, for instance, a company that is really doing badly, and like a Yes Bank, for instance, it may not be a bad company or a fraud company, it's just that it's a bad cycle. It's completely fair to make money when it falls from 400 rupees to 40 rupees. That's perfectly fine. And I think that's how the market operates. You need a seller for every buyer. But at the same time, to hammer down a company for no reason at all, to invent perhaps rumors and then hammer down companies, these things are not acceptable. And if you have players like Ambani who will counter those those shorts, then you have a real market, so you don't have the might of one side of the market taking down shares just because they want to. And you don't have the might of course, you do have the might of people who have a lot of money who take up shares whenever they want to. But you hope that the short sellers will keep them at bay and that the strong bulls will keep the crazy bears at play. So this was the first example. We haven't seen much of those kind of things, but we've seen short squeezes. People who've tried to short and then have gotten squeezed massively. One of the biggest was I think in the Volkswagen Porsche debacle, one of those companies, because they ended up having shorted so much of one of these companies. I don't know whether it was Volkswagen or Porsche, but the one of them became the most valuable company in the world because the guys who shorted had to buy back the shares. Has happened in India as well. There was a company called, I think now it's called Uptown, and earlier it was called Akruti, where there was a situation where the shares went from some 400 or 500 rupees to 2000 rupees within a month.
Oh.
Because the shares, whoever was shorting the shares was squeezed out, and the buyers just took the share up quite a bit, and they wanted to squeeze the short players out. It didn't play out very well because the share price fell after that. They were removed from the futures and options. And here it comes to where we are today, where you can short companies in the futures and options market. But the way that works is you put a certain margin up front, typically 20% of this whole size, which was not really a requirement in Badla, but it was kind of more... the margining was a different concept there. But here, every day you pay mark to market. So the price goes up, you pay that price. If the price falls, you reduce, you get that money back if you're a shorter. So if you're shorting, you make money when the price goes down. So you'll short one share in the futures market. And that if that share price falls, the person who's on the other side, which is the long future, why would you do this versus buying the shares? Is to buy a shares you may need 10 lakh rupees, but to do a future you need only 2 lakh rupees. So you would going to take this 5x leverage and say, listen, I'll bet 2 lakhs, I can get exposure for 10 lakhs. So if the stock goes up by 1 rupee, I make 5 rupees, right? So effectively on my money. So to leverage yourself, you want to do that. And the people who short are simply saying, listen, I don't have the shares, I want to short it. Please allow me to short it by putting only 2 lakh rupees down. If the share goes up 1 rupee, I'll pay 5 rupees, effectively for my trade. So it's a way to leverage, it's a way to short. That's the market today. There is a settlement period every 1 month for futures. And because the margining is strict and you have to pay mark to market to the exchange every month. And apart from the mark to market price change every day, there's also a margin that has to be maintained for every position. This is a lot safer than the Badla option. And what you will do for Badla this time would not be if I'm long, if I bought some share in the futures market, then I want to move it from January to February. I have to sell the January contract and buy a February contract. So I have to actually do this Badla by myself. That Badla can be like the February contract might be 10% higher, or it can be 1% higher, or it can be 0.5% higher. So you don't know what that is in advance, but typically, these rates, the differential is usually the interest rate of the day. So today's interest rate is 6%, so you'll say roughly 0.5% per month. Roughly. You can go up to 1 or 2% based on the share itself. So that's what the derivatives market is today. This is an interesting thing that happened in 1982 that actually probably changed a lot of things for Indian equities, because when people got to know about this, they hailed Ambani as a hero. Because no matter what you can say, some friends of Reliance, some crocodile, everybody believed at the time that this was Reliance, and he batted for the little guy, right?
And you can't mess with him.
And the point is, the small investor benefited. when the bears who were so used to taking the small investor out, because the losers would be the small investors
Exactly.
who would actually come in panic and sell the shares because they made a loss. He batted for those guys. That's why I think he's an unrecognized hero in a lot of ways. But this was one of his really heroic acts. And look, I'm a fan because, I think a guy coming out from nowhere, from a little town, coming and making himself big, and I think that deserves a lot of praise for his conviction, for whatever he did. There were things, of course, that people may disagree with and all that, but in this particular instance, I believe he batted for the little guy. He brought the lure of equity investing for retail participants. He made that popular in India, and for that we have to be thankful, because that's one of the reasons why we continue to participate in the markets as well.
Amazing. Thanks a lot, Deepak. So I would request our listeners, they can let us know if they like such concepts of short narrative based podcasts where we pick up stories from the past and we discuss.
Hi, I think any questions, please connect on Twitter. I'm at Deepak Shenoy. We also are at capitalmind_in. Aditya is astute_Aditya. We'd love to hear your questions, your thoughts. We'll give you a link to the books that we mentioned here on our post that accompanies this podcast. And we'd love to hear from you. We're capitalmind.in. We're capitalmindwealth.com for our portfolio management services. And it's been an interesting last year. I hope this year is going to be a lot more fun, a lot more podcasts and stories like this. Thanks so much for listening.
Thank you.